Well, the Aussie dollar's been quite temperamental these past few days, and one reason for that is the huge swings we've seen each day in the market's pricing of whether the Reserve Bank will cut interest rates at its next meeting in February. The odds jumped from 9 to 67%, and now it's back down to 48%. And this is the result for the Aussie dollar. That big fall at the start of the week coincided with the RBA's decision to keep rates on hold, while hinting that a February rate cut wasn't totally out of the question. And when the ABS job figures came out yesterday, the dollar rebounded, as an unexpectedly strong jobs market means there's a risk that interest rates and inflation might stay higher for longer. But today, it's a totally different story, with the Aussie dollar wiping out yesterday's gains. The Aussie dollar is down to 63.6 US cents, and it was reasonably steady against the euro and Swiss franc after the central banks in charge of those currencies decided to slash interest rates again. Elsewhere, the All Ords slipped by just 0.4%, and it's fallen for 6 days in a row now, taking its weekly loss to 1.6%. Shares of mining companies fell quite sharply, while uranium stocks jumped after the coalition released its nuclear costings and claimed it would be cheaper than the Labor renewables plan. And while Wall Street slipped from its record highs, markets in Asia tumbled after China pledged to introduce more stimulus without providing much detail. And finally, a bit of profit-taking led to the gold price falling, while oil and iron ore were steady. And that's finance.